Are we on the verge of a financial shakeup?
We have top experts like Jeff Snider and Brien Lundin sharing their valuable insights with us today.
And here's the best part. You'll get all the key points right when you need them.
Exactly. Find out why gold could reach monumental highs and how to position your investments wisely.
Welcome to Financial Insights in Minutes, where we provide comprehensive market summaries.
Stay tuned as we uncover how Fed rate cuts could redefine your investing strategy.
But first, let's check in with Eurodollar University, where Jeff Snider shares his take on interest rates. Anchors away on today's topic. We're diving deep into how Fed rate cuts really affect interest rates and the broader economy.
Let's get straight to the facts. Jeff Snider discusses how the market's expectations around rate cuts aren't aligning with reality, particularly in the short run.
That's a rocky wave to navigate. What should we expect when central banks start cutting rates? So what's the key takeaway from Snider's insights?
The core thesis is clear. Rate cuts by the Fed often lead to counterintuitive market reactions. While cuts are seen as beneficial, initial responses can actually lead to rising rates, complicating market expectations.
Let's break down those key points. What's happening in the market?
Snider reveals that rather than showing immediate drops, rates can actually rise following rate cuts, indicating deeper market complexities.
What about those historical patterns Snider mentioned?
He emphasizes that there's no uniform process. Rate cuts have historically varied, impacting short and long-term expectations differently.
So how do economic fundamentals fit into this puzzle?
Snider highlights that real economic conditions, like growth rates and inflation, fundamentally drive the market's behavior, overshadowing central bank maneuvers.
What predictions does Snider make about the future?
He predicts that we will continue to see market volatility and fluctuations in interest rates, even as the Fed cuts rates, complicating the investment landscape.
And what about the bigger implications?
There's concern that a sustained pattern of rate cuts compounded with market fluctuations might lead to a significant economic slowdown over time.
To wrap it all up, what are the key conclusions here?
Snider underscores that grasping the intricacies of rate cuts and market dynamics is vital for anyone looking to navigate future financial landscapes effectively.
But hold on to your hats. Up next, we explore insights from Brien Lundin on gold could double if this bullish cycle acts like past ones.
Trust me, you won't want to miss what Brien Lundin has to reveal.
Anchors away as we dive into today's treasure. Could gold potentially double?
Let's get straight to the facts. Brien Lundin shares compelling insights on gold's promising future.
A hull of a prediction. What's the main driver behind this gold rush? What's the main takeaway from Brien's insights?
Lundin argues that considering historical performance, if the current cycle mirrors past trends, gold could reach between $6,000 and $8,000.
Let's explore the historical context for gold prices.
3 previous cycles, starting in the 1970s, showed remarkable price growth, providing a comparative perspective on potential future gains.
What's fueling these soaring predictions for gold?
As central banks like the Federal Reserve shift strategies, investors are hedging against inflation by turning to gold.
What about silver? How does it fit into this picture?
Silver may catch up to gold's gains due to its industrial demand, leading to a potential price surge.
What are Brien's predictions for gold prices?
With historical trends as a guide, reaching $6,000 to $8,000 is plausible, though with inherent risks.
And what about the mining sector?
Investors are expected to shift towards mining stocks, especially juniors, seeking leveraged gains as gold prices rise.
What are the main takeaways from Brien's discussion?
This could be a watershed moment for precious metals. Investors should consider their allocations carefully.
In summary, viewers should remain vigilant for emerging trends in gold and silver.
The market is evolving, and those investing in gold and silver now could reap significant rewards shortly.
But hold on to your compasses. Next up, we explore breakout before the CPI inflation report.
This next video features insights from Matt on the channel Trade Brigade. You won't want to miss what he has to say.
Anchors away as we navigate some choppy waters. Today we're diving deep into the latest insights on stagflation ahead of the CPI inflation report.
Let's get straight to the facts. Matt emphasizes a tradable breakout potential before the CPI report, especially with the recent labor market surprise.
Sounds like there's plenty of turbulence ahead. What should viewers watch for in the data? So, what's at stake in this week's analysis?
The core thesis revolves around preparing for potential volatility as CPI data comes in. Traders must keep a close eye on the market structure, specifically looking for breakout opportunities or signs of decline.
What about current market structures?
The analysis identifies a bullish hammer on key charts, suggesting the possibility of breakouts if buyers can maintain the momentum above resistance.
What's the scoop on the upcoming CPI data?
Traders are bracing for potential surprises in the CPI report, particularly in housing costs, which could significantly influence market sentiment.
And what about trading strategies?
With a strong close above key levels, traders can lean bullish, but they must stay vigilant about sudden market shifts following the CPI data.
Looking ahead, what are the predictions following the CPI report?
Expect increased market volatility post-report release. Traders should be prepared for sharp movements in key indices.
And what about stagflation fears?
Indeed, the specter of stagflation looms large, prompting traders to stay updated on inflation trends to navigate potential pitfalls.
To wrap it all up, what's the takeaway?
Traders need to stay adaptable. The upcoming CPI report could provide critical insights that will shape trading strategies moving forward.
But hold your horses. Coming up next, we delve into insights from Michael Casey on his AI on the verge of destroying humanity.
You won't want to miss his thoughts, so stay tuned.
Anchors away as we navigate the tempestuous waters of AI. Are we on the brink of destruction?
Here's the scoop. Michael Casey raises alarms about the ethical perils of AI advancements and their potential threats to humanity.
What a precarious ship to sail. What's got Michael so concerned about these tech developments? So what's the central theme from Casey's discussion?
The thesis emphasizes that without stringent safeguards, we may unleash AI that operates beyond our control, leading to unimaginable risks.
Let's break down the key points, starting with the current state of AI. What's happening?
AI technology is evolving at breakneck speed. We are now nearing human-level reasoning, but this has alarming implications, with so much power concentrated in a few hands.
And what about OpenAI? What challenges are they facing?
OpenAI is struggling with employee retention, as many talented individuals have left, signaling deeper systemic issues. The lofty ideals have been replaced by profit-seeking motives.
What are the threats posed by AI? It's time to confront the monsters under the bed.
The threats are significant. AI could sway public opinion through misinformation or even be weaponized for malicious purposes, putting humanity at risk.
Now, what predictions does Casey offer regarding AI's future?
He foresees increased governmental regulations as more people demand accountability from AI companies due to rising fears.
And what about the entrepreneurial landscape? Any shifts expected?
Absolutely. The rise of decentralized AI firms is imminent, fostering tech solutions with transparency at their core to prevent abuses.
Wrapping this up, what's the takeaway?
Michael Casey stresses that prioritizing ethical development and transparency in AI is crucial for preventing risks and protecting our future.
But hold on to your seats. Next, we're diving into insights on deglobalization with Joseph Wang.
You won't want to miss the revelations he has in store.
Anchors away on our next topic. Geopolitical tensions are sending shockwaves through the markets.
Let's get straight to the facts. Joseph Wang discusses how recent events in the Middle East are poised to affect economic stability globally.
Batten down the hatches. What does he see on the horizon? What's the core idea behind Joseph's analysis of the markets?
Wang points out that the current geopolitical strife, particularly between Israel and Iran, is creating a complex backdrop for market dynamics. Combined with strong U.S. job figures, it's a potent cocktail that could tilt the scales.
Let's break down the key points Joseph highlighted. What's brewing in the geopolitical pot?
Recent missile attacks by Iran have left Israel on high alert, prompting fears of a full-scale military response. This has big implications for oil prices, expected to soar as tension mounts.
What about the U.S. economy? How's the job market holding up?
Great question. The latest job figures reveal a surge, 250,000 jobs added, and an unemployment rate at 4.1%, showing strength in the U.S. economy.
And what's going on with central banks globally?
Central banks worldwide are taking note. Both the Bank of England and Bank of Japan are hinting at rate cuts, indicating a shift in monetary approaches that could reshape the market landscape.
What predictions can we pull from Joseph's insights about the oil market?
Wang warns of a potential oil price surge if military actions escalate, disrupting supply. A volatile oil market is on the brink.
What's the outlook for the market in the coming weeks?
With geopolitical tensions high, traders should brace for significant market volatility. What we see today might change dramatically by tomorrow.
So, what can we glean from today's analysis?
Wang emphasizes that while strong jobs data is reassuring, geopolitical instability could turn the tide at any moment. A reminder to stay tuned.
And what does this mean for policy going forward?
Expect shifts in central bank policies to continue, tailored to the changing economic landscape. Keeping a close eye on economic data will be crucial.
Valuable insights packed into one summary. Don't forget to like and subscribe.
Your support helps keep these insights coming, so let's navigate the waters of finance together.
Wow, that was quite an enlightening discussion today, don't you think?
Absolutely. Jeff Snider raised a fascinating point about how the Federal Reserve's recent decisions could really shake up the markets.
And what about Brien Lundin? His analysis on gold was sparkling, hinting that it could possibly double in value.
Right, and it seems there's a general agreement among guests about the market's unpredictability tying into those Fed cuts. But don't overlook Matt's point about potential stagflation risks.
True, it really showcases the diverse perspectives in today's economy. And Joseph Wang emphasized that volatility can be managed with the right investment strategies.
The more we learn, the better we can steer our financial futures. And speaking of learning, if you found today's insights valuable, make sure to hit that like button.
Yes, don't forget to subscribe to our channel for more expert insights that you won't want to miss.
And be sure to check out our other videos for additional financial wisdom. Thanks for joining us today.